Hello and welcome back. This is the Carrier Update brought to you by Powerfleet. I'm here with the one, the only, the Sultan of Sonar, Zach Strickland, and we have a chart. A map.
Yes, a map, Anthony. It's our weighted rejection index map. I know I tried to throw you off there with the big white color of the United States here, but we've got a lot of colors, kind of low grade colors on this map, and that's an indication that we've got a lot of kind of small changes going on and disruptions going on across the United States, really. The Tinder rejection index, of course, hovering around that 18.5-ish% area right now. But underneath all that in aggregate, like, you've got a lot of things coming up, a lot of things moving down. The blues, of course, are the markets that you're going to see the tightening week over week, and the oranges-ish and darker reds, when things are a little bit more severe, are the markets where you're seeing things easing, so lower rejection rates. This doesn't get a color unless it is a significant movement. It's not everything that's going up and down. It's simply the ones that have moved large enough to show up on this map, because we combine it with volume or market share value. And the market share value is represented in the deepness or the tallness, height, I should say, looking for the word, of each of these markets. So, you know, we still have this area of disruption going across this Midwestern corridor right here, all the way out into Denver. And we haven't had a lot of weather disruption this week. I mean, we're talking about some up there in the Pacific Northwest, if you listen to Nick Austin, and we were going to have something over there in that Stockton market, which is showing an easing sign at the moment. Maybe that's a lot of carriers trying to get out of the way of this system as it does drop snow over Donner Pass and maybe Shasta a little bit. So, not a great area to get stuck in if you're a carrier, because that is a slow roll if you get caught up there on top of the mountains in those snowstorms. So the rest of the country, though, we're talking about Jacksonville, Columbus still in blue here around the Rust Belt area, the old area that Vincent grew up in up here around Cleveland, but Toledo, the darkest blue market on the map today, along with Kansas City and the Joplin market, and then, like I said, Denver. And then we still have this weird northeastern corridor. Elizabeth, New Jersey continues to show up in blue on this map week in and week out. It had a few weeks where we weren't talking about it, but Elizabeth, New Jersey, if you're a carrier, like, there's definitely some sort of resistance, but it's right there around the city, which is obviously a very difficult place to operate in, very inefficient due to traffic congestion issues. Harrisburg, easing. Up there around Green Bay, also easing as well. So very mixed bag. Let's go to the next chart and look at some of these markets in detail. So we've got the Toledo market, not a huge market by any means, jumping up to about a 20.28% tender rejection rate. That's up from 15% last week. So we're talking about these values jumping up, but they're not necessarily moving outside of these bands of influence here. So we're talking about keeping these things, you know, kind of nestled up. Even though we have pretty sharp week over week jumps, it's not that crazy right now. So maybe just on a week over week basis, you're talking about some waterfalling issues, things falling out of their right guides a little bit more. I mean, a 15 to 20% jump is pretty huge, but I don't think it's necessarily going to create some sort of mass chaos in these markets.
Yeah, I was really surprised to see Denver kind of popping up here a little bit on the map on the previous one, but really looking at Toledo, you said not a huge market, but definitely drawing some attention here with some of that blue movement. Zach, what do we typically see in the Denver market in terms of things going in and coming out? What's that market usually popular for?
Yeah, Denver's normally a pretty volatile market this time of year because of the weather and the snow. Like, anybody that's gone out there and gone skiing or been out there around this time of year, they don't really get their most significant snows until like February, late February, early March, and then they get dumped on. We're not seeing that necessarily right now. A few weeks ago, we did have some stuff going on, but if you look at the Denver market here, it's again, a pretty big jump week over week. Definitely something to keep in mind. I mean, a 21% rejection rate out of Denver, that's a big deal, because this market is typically relatively well supplied. But what we've seen over the last year too is compliance rates are really what we're judging. So a lot of these rates out of Denver are subdued. They're lower than you would necessarily expect. So it's more about these carriers kind of choosing these areas that they're going to cover. Some of them are now choosing to drive empty out of these areas instead of hauling some of this low value freight. So this 21%, I feel like, even though it's typically pretty oversupplied or well-supplied market, may be indicative more of the rates inside of contract themselves that have not necessarily inflated just yet. And that's what's probably driving a lot of this in the Denver market so far.
Gotcha. Yeah. When I see some of these areas pop up, my first thing starts to go around, hey, what are going to be some of the lanes here? And first, one of the things that come to my mind is like, I wonder if, of course, Denver to Ontario might be one. Then, of course, I think Denver to Atlanta as well.
Right.
But that's going to do it for this carrier update from Zach Strickland. We'll be sure to check in with him again later on throughout the show. Right now, we're going to take a quick break. Don't go anywhere. We'll be right back with more for Ooze Now.